Bitcoin, again, just chopping along here. Now, the interesting thing with Bitcoin is we might be starting to make a little bit of bearish consolidation on the chart. Now, remember how flags work. Flags are up moves. This would be a bull flag with a right angle. That would be a bull flag. An in spirit of bull flag is like, excuse me, that's not quite accurate. Let me just erase that. An in spirit of would be about a 45-degree angle like that. Both are bullish. You'd expect both to go like that. In this situation, we had the beginnings of a bull flag. It then failed, right? With this big down move right here. So what do we have now? Well, the big down move now resets the chart, and we now have to say, okay, well, now we have a big down move. Are we now making a bear flag on the chart? If I'm correct, and we do see another flush in crypto, you know where you're going? Right over to this level, 38,000. That's this upsloping, meeting this flat line right here. That would be your short-term target. Now, again, short-term target just for a bounce level. Whether or not or when that ETF gets approved, we have to see what the heck price does. But that would be how you would analyze this chart. So now, to be fair, I want to be fair on this. 2 candles of sideways action is what we call an immature bear flag. All right, immature means that probabilities, remember, everything's probability-based, it's lower probability than if it was a mature bear flag. What does a bear flag make up in terms of maturity? It needs probably about 4 to 5 sideways candles. All right, once you get to 4 to 5 to 6, you're now at a mature flag pattern, which gives you the highest probability of success in that direction. So with only 2 sideways candles, it's very immature. I would want to see multiple more candles to really solidify the higher probability that we're heading down to 38, but that's what's forming right now. Looking at gold real quick. Let's take a look at gold here, guys. Gold is holding the key support levels here for now. We'll see if, again, it continues to bounce up. Obviously, the weakness in the dollar is helping gold as of now. But again, we are in this key zone here. We want to see if it starts to push back up. And again, obviously, we know 2080 is that key high. We want to see a daily close above that. I then think we test this high at 2150 or so and off to the races. But again, right now we're holding the key support.
Hey, Crypto Street investors. Bitcoin just pulled off a stunt, a 7.5% dive that left us all gripping our crypto seats. What's the deal? Buckle up, subscribe for the crypto roller coaster, and let's decode Bitcoin's nosedive. Crypto comrades, did you feel the tremors? Bitcoin took a plunge, the biggest drop since August, shaking the crypto world. After a jaw-dropping 150% surge this year, this sudden dip got everyone scratching their heads. Rewind, folks. Binance, the crypto giant, settled a $4.3 billion fine. A slap on the wrist for them. The U.S. regulatory scene was warming up and Bitcoin was soaking in the positivity. Proposals from big shots hinted at a friendlier crypto environment. Plus, the buzz around Bitcoin's halving and a potential ETF approval added rocket fuel to the crypto rocket. But hold on, the joyride hit a speed bump. Profit-taking vibes kicked in and after those record highs. High-leverage traders found themselves on shaky ground and macroeconomic predictions threw in their 2 cents. A robust jobs report and Fed rate cut whispers in 2024 made the market jittery. Here's the plot twist. Crypto's Achilles heel, excessive leverage. Overenthusiastic bulls on leverage steroids faced liquidation risks, triggering a chain reaction. In this crypto jungle, even minor corrections can send shockwaves. BlackRock, the Godzilla of asset management, just revamped its Bitcoin ETF game. They're making it rain revisions, and Wall Street is getting an all-access pass to the crypto party. What's the deal? BlackRock's new move. It's called prepay. Wall Street banks like JP Morgan and Goldman Sachs and create ETF shares using cold, hard cash instead of crypto. It's like a VIP ticket to the crypto concert, and Coinbase custody is holding the keys. BlackRock faced off with the SEC, not once, not twice, but thrice. The new model aims to be the superhero against market manipulation concerns. It's like BlackRock saying, "We got you investors." This overhaul addresses SEC worries and boosts investor protections. Time's ticking, finance warriors. The SEC has until January 15, 2024 to decide BlackRock's fate. Will they greenlight this ETF revolution? Wall Street's watching, and so are we. Now let's continue our enlightening discussion with Gareth Soloway.
The 10-year yield chart here, guys, we have bounced off this over the last few days. This is the daily chart. We are starting to come back in, but remember, we have a lot of support down here. Does the Federal Reserve today cause a drop in yields where we start taking out this support, or do we hold that support and turn back up? I still think, again, in general, we're probably going to hold around the 4% level or higher until we see the economy start to crumble. And by the way, yesterday, Hasbro's laying off a bunch of people. I think something like a quarter of their workforce, they're laying off. So we're seeing, in my opinion, you're seeing the underbellies of the consumer begin to crumble. The consumer is still spending like crazy, but we know it's on credit cards now. It's on buy now, pay later, all of these other things they're continuing to do. But again, they're starting to crumble. My guess is first, second quarter of 2024, that's when things could hit the fan. All right, going to the U.S. dollar. The U.S. dollar, again, look at this. This is the intraday chart. I want to flip over to the 10-minute here, because if you look at the 10-minute, this is what happened when we got the PPI numbers out. The dollar began to drop, okay? So again, as the dollar drops, what do we know the markets do? The markets get a bid. If we remember that S&P chart we just looked at, the spiders on the intraday had started to go like that, inverse to the U.S. dollar chart. That's very, very normal. Going back to the daily chart of the DXY here, if we look at this, we're stuck within this range, right? We hit support, and I called this beautifully. We talked about the dollar getting into support here. We then bounced back to the resistance I gave. Now we're starting to come into this range. And again, where do I think we're eventually going? I actually think the dollar is going to break down. The only difference in what the thought process is here is that I do eventually think a breakdown on the dollar. There'll be some point down here, wherever it is, where it starts to be a negative for the market, because the market is starting to spin and realize that it's not going to be all roses, that we're not going to have this perfect landing, and the Fed is going to be handcuffed. Remember, I want to be clear on this. If you looked at CPI yesterday, if you looked at PPI today, they're basically unchanged to slightly higher, okay? Think about this. Right now, if you look at the CPI year over year, we're at 3 to 3.5% in inflation. What is the Fed's goal? Sub 3%, 2.5%, 2%. So again, we're now starting to stall out on inflation, and the question is it going to continue down? And if we flip into a recession, will the Fed be able to cut aggressively, knowing that inflation is still elevated? Maybe inflation will come in. There's a lot of people talking about deflation. I'm not one of them. I don't think we're going to see deflation. I think there's too many pressures here. The U.S. debt, the U.S. consumer. Again, how are you going to get deflation when you have $34 trillion in debt that, again, the only way the government can fund it is by printing money? So again, I don't understand how this deflation, thing works. Well, I understand deflation, but the idea is you have to be able to look and say, okay, take from A to B to C, and there's no deflation in there. Now, it doesn't mean inflation's not going to come in. It has already dramatically. But to really go down to deflation, I have a hard time believing that narrative at this point. This is a chart I've talked about pretty much every single day now for the last probably 2 weeks, right? Amazing how we've generally stayed in this channel. Yesterday's flowed up. We're just about at the highs. Right now, the S&P 500 futures, the markets are up slightly pre-market going into the open. Last I checked, it was about $1 higher. That's going to put us right at the high end of this channel, all right? So again, this is really kind of a game time decision, to use a game plan type comment, right? Where we have to watch. We're at the high end. Every time we've been at the high end, or since mid-November, we've had a sell-off, 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 right? So the question is today going to be the day where we see that sell-off again, or does the Fed deliver another dovish kind of, oh my gosh, everything's hunky-dory, and do we break out of this channel here?
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.